What's up, guys? Welcome back to the channel, or welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that brokerage account, they're going to give you up to 12 free stocks worth up to $30,600. There's a link down in the description box of this video. Go click on that Webull link. Open your new Webull brokerage account today. Go get that free stock. Go get that free money. We've had a pretty interesting week, guys, in the stock market. On Wednesday, April 12th, we had the March CPI report that came out. And that report measures inflation. It measures the cost of the goods and services that we use on a daily basis. Back in June of 2022, inflation was 9%. As of the March 2023 CPI report, inflation is 5%. It's coming down, guys, which is good news for our economy. We need it at 2%, but we've come a long ways since June of last year, all the way down to 5%. Here's the thing, though. The Fed is going to continue to put pressure on inflation by increasing short-term interest rates. Now, the Fed is going to be meeting again in May, and it's widely expected that they're going to increase short-term interest rates by another 25 basis points to continue to beat down inflation. Inflation needs to be 2%, guys. That's where our economy is the healthiest, is when inflation is at 2%. Again, like I said earlier, it's at 5% now, but it's a long ways from the 9% we were at in June of last year. So we're making great progress. That is good news once again for our economy, and it's good news for the American people. So what will determine if the Fed increase short-term interest rates by 25 basis points in May or not? Well, I think more data. I think by the time the Fed meets in May, I believe we will have the jobs report for April, and we should have the April CPI report. So those two reports are really, really important for the May meeting of the Federal Reserve. So when they compile all that data and take a look at all that data, they will determine if inflation is declining at the rate they want it to decline. And if it is, there may be an opportunity not to increase short-term interest rates. Now, the market has already priced in 25 basis point rate hike in May. So if they pause and do not increase rates, guess what's going to happen to the stock market? It's going to go crazy, right? We're going to see a stock market bounce because, again, the market is pricing in 25. If we don't get the 25 and they just pause, that's even better news. You'll see a really, really sharp bounce in the stock market. If they do the 25, I think it'll be business as usual in the stock market. Nothing will happen. If they go higher than 25, then obviously, in my opinion, stock market would certainly sell off because that's not priced in. But really, most analysts, most people who follow this and really know what they're talking about are really thinking 25 basis points. But I believe there's a slight chance it may not be any increase if we get good news in the April CPI report and we get good news in the April jobs report. Those are two critical reports in my opinion. If those beat expectations, then there may be an outside chance the Fed don't increase interest rates in their May meeting. So stay tuned for that. Let's continue to watch the data as it rolls in, and then we'll be in a position to know kind of what the Fed is thinking and what they'll probably do in that May meeting. Nevertheless, what's our task, or at least my task, and I'm asking you guys to consider it as well? I'm going to keep buying assets, man, no matter what. right? Because these assets are still historically at a discount. They are, man. S&P 500 ETF, well, at least Vanguard's S&P 500 ETF, VOO, the last time I looked at it, it was around $370 a share. You got to remember, in December of 2021, it was trading around $460 a share. So it's still heavily discounted in my opinion. Now, some may argue that and say, hey, it was overvalued in December of 2021. Right now, it's probably where it really should have been. Hey, that's one opinion. My opinion is if it did it before, it can do it again. That's the way I think. So I still believe it's undervalued at $370 a share. I think it's somewhere between $450 and $480 a share once we get back into this new bull market, which I think we'll get there in the next couple of years, right? I think 2024, tail end of 2024, we'll start. And then when 2025 rolls around, I think we'll be well into a new bull market. And that's where I believe all these assets I'm buying at a discount will be worth more when that happens. So my goal is to consistently dollar cost average in to my favorite ETFs and some individual stocks, but heavy ETFs. 50% of the money that I'm investing is going into broad-based ETFs like the S&P 500 and the total stock market ETFs. 30% of the money that I'm investing is going into core sector ETFs like healthcare and technology, right? Those are my two core sector ETFs that I'm buying. Why? Because I think tech is the future. And then two, healthcare. We got an aging population in this country, so healthcare is never going anywhere. It's ever increasing, right? So I like those two industries, healthcare and tech. You have to decide what you like. And then 20% of my money is going into individual stocks. Companies like Tesla, Apple, Bank of America, Wells Fargo, because I'm a big financial services guy because I spent 25 years in banking and I know banks make a lot of money, man, and they pay a strong dividend while I hold my money in their stock. So I love banks. But I'm big also, again, on tech. So I'm going Apple and I'm going Tesla. But those are really the four individual stocks that I'm going to be buying. And then, like I talked to you about, I'm buying a tech ETF, I'm buying a healthcare ETF, and really it's Vanguard Information Technology, VGT. That's the tech one I'm buying. And then Vanguard Healthcare ETF. I'm buying that one as well. And then back to the S&P and the total stock market is where the rest of my money is going. 50% of my money goes there. Broad-based stock market ETF. So that's my plan, guys. My plan is to continue taking every dollar and 50% ETFs, broad-based, 30% more industry-specific, sector-specific ETFs, and then 20% individual stocks. Drop me some comments and let me know what your plan is. What is the breakdown of the money that you're investing in? What are you investing it in? It'd be interesting to know that, and drop them down in the comment section and let me know. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.